Depreciation. What is that? Hey taxpayers, welcome back to our YouTube channel. It's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. Today, we've got another installment of What is that? And we're talking depreciation, what it means, how it affects your tax situation, and why it's so important to understand. So let's start right at the beginning. Ideally, we deduct all of the expenses we make for our business within the same year. But when you purchase large or fixed assets, you must depreciate them over time. Depreciation is an accounting convention that allows you to deduct the value of an asset over a fixed period of time, known as the asset's useful life. Assets that are typically depreciated are machinery, equipment, furniture, and real estate. So, the entire cash outlay of the purchase may happen in the current year, but the deduction will happen in portions over time because you are using that asset over time. Therefore, when you see a depreciation expense on a profit and loss statement, many times it is not a cash outlay, but it still reduces the earnings of a company. For tax purposes, the IRS publishes depreciation asset schedules where they tell you exactly how many years and what type of depreciation you can use for the different types of assets, which we call asset classes. For example, if a company buys a piece of equipment for $50,000, and after reviewing the IRS table, you see that that asset can be depreciated over 10 years, then you would take a depreciation deduction of $5,000 for the next 10 years, instead of taking a $50,000 deduction in 1 year. This is why some business owners like depreciation. They can purchase a large fixed asset in the current year, only take an expense of a portion of it, which means their net income will still stay high, and they'll have a future expense for the next 10 years, helping them reduce taxes in future years. But other business owners despise depreciation because they've purchased a large fixed asset in the current year and can't fully deduct it. So their taxes in the current year may be a bit higher, and they'd rather recognize the tax benefit now than later. Now, I'm really oversimplifying the explanation here to make it easy to understand. The truth is there are so many different types of depreciation, like straight line and accelerated, and there's also various changes to the tax code all the time that allow for bonus depreciation or 100% depreciation. This is why it's so important that you have a good CPA on your side helping you navigate depreciation deductions and leveraging them to your advantage. We hope you enjoyed this latest installment of What is that? Please hit the like button if you absolutely love this video. Subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.